Welcome everybody, this is the Viper Trading webinar. We are here to talk about trading futures instruments using the Viper tools. Tonight's topic is quickly identify market conditions and look for the trade. See the trade in advance. So without further ado, let's knock out our standard disclaimer so we can get on with it. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody does know you do trade at your own sole discretion. So we promised everybody we're going to start off with the Russell and NASDAQ here tonight. So let's get over those charts. Got a lot of instruments to cover here tonight. And so we're going to start with the Russell. Okay, here we go. Come over to screen one, like such. All right, so this is the Russell. Most of you know, of course, I'm here in California. This is where the Russell's at right now at this moment. We're connected to a live data feed to the broker, NinjaTrader, giving us feeds for the futures instruments. And let's go back to the beginning of the market. So the market open, equity markets open at 6:30 Pacific time. Now, there was some sharp contrast in the equities today due to this whole continued concern about tariffs. You know, the tweeting of the tariffs and the whole China tariff issue is really rocking and rolling the markets. And so what you can see here, let me orient everybody as to what you're looking at here. This is midnight Pacific my time, so just adjust that to your local time. This is the end of the Asian session, beginning of the European session here. Asian session, European session. So you can see that the equity markets in the European session were really selling off big time. However, like such, this was a sell-off. Okay, pop quiz to make sure everybody's still awake. You got to be awake to trade. You can't trade in your sleep, despite what people tell you. Between here, let's do this. The beginning of this arrow down and the end of the arrow down. Okay, I'm going to help you out. How many short trades set up in the market? I'll help you out. They were short trades. I'll give you 10 seconds on the clock. How many short trades set up from the beginning of this arrow over here to the end of the arrow over here? Counting short trades overnight. 7 seconds. Just count them up real quick. Look at the chart. Count them up. Put in a number. It should take you no time at all if you know what you're doing. 5 seconds on the clock. Counting overnight short trades on the Russell. Count them up. Put in a number. Cast your vote. 4 seconds left to call the short trades overnight on the roosty bird. The gnarly roosti. It's like non on gristle. 2 seconds. Come on, count them up. Put them in there. Last chance. How many shorties? Shorties. All right, time's up. Now, let's go over here to the left and look at this. Let's do the obvious ones first. And then we'll circle back and look at the ones that are sort of on the bubble. Let's just say like that, on the bubble. By the way, if you're just coming in, we're looking at a Russell chart. We're counting short trades and the overnight sessions. So everybody can see pretty clearly, you know, I don't know how you're going to count this. There was one here, got a scalpy out. There's a rollover there. And you could argue that this is still kissing the mid-band. So, you know, is this 3 trades or 1? That's debatable. You know, for the sake of simplicity, let's call it 2. Let's split the baby there. We'll just call it 2. It's actually technically 3 pops. Obviously, another one's here. Everybody sees that. The kiss and roll off to midband, textbook trade. If you're counting all three of these, that would be 4. Now, the ones on the bubble are as follows. Over here, you could make the case that you could have boxed it, Russell in at the midband like such with a region box. You were never filled long. At the time this happened, though, you had, I don't know if it was a green background. Would you have enabled the short side? At the time, you might have been looking up. If you did, you got filled short here. So arguably, that's the first short. Okay. And then, technically speaking, this little retracement here where it breaks and closes above line 2 and stealth right up in here is technically another short trade. However, it obviously didn't give you much by the time you were filled. You might have got to stop, and then you stopped out probably close to break even or even a slight loss. So if you're counting actual trade setups per se, which was the question, 1, 2, 3, 4, 1, 2, 3, 4, 5, 6. If you had counted this whole encounter with the midband as 1 trade, not 3, then it would be 1, 2, 3, 4 possible trade entries. Good. Most of you got that. I see a lot of 3s. I see some 4s. I see some 5s. So does that help? Everybody seeing those? Cool. Most excellent. Gold star right out of the gate. All right, so let's fast forward. So here we are around 4 or 5 o'clock in the morning, and what starts to happen is the Russell, as of, say, I don't know, right about there, is the Russell still in a down condition going forward from 5 a.m. Pacific? This is still the pre-market in the U.S. It's the tail end of the European session. And are we still looking for shorts, or has the trend changed to up? What say you, team? What say you, team? Yeah, trend's changed, right? Trend's changed. We come up, we pull back, we hold the midband. We come back, we hold the midband, we hold the midband. We push higher here, changing the trend. The background's green. Arguably you had a couple of long trade setups if you're a night bird and you were trading. I mean, you can make the case you had a little long pop there. And then, of course, this retracement right here was a long trade, which turned out pretty nice. Now, let's fast forward to 6:30 a.m. Pacific, which is the open of the equity markets right here. Right here. So let's see here. Gary opens the room at 5:55, which would have been right about here. So for those of you that were there at 5:55, I think he put this box in. When I came in the room, I didn't get in the room until about 6:20, 6:25. So I think this trade had already set up. Did he put a box there, right? I'm like 99.9% sure he did. Was anybody there to see it? Yeah, Toby? He did? So that's obviously the trade entry. That's the trade entry right there. So, coming into 6:30. So I guess the secondary question is, could you have boxed it here, and then caught the break? And the answer is yes. Because when this little consolidation patch, we don't normally like to do this, but at the open, if you're going to get a pop, it's going to pop out of here, and it popped right here. If you, depending on how you had your box positioned, you probably filled long on the close of that bar right there. Now, shortly after this first burst at the open, this pop right here, you came down and you get another shot right here. Another entry right there. So as far as long trades go, from when the trend changed around 5 a.m. and here, you had the first pullback here, trade long trade number 1, arguably long trade number 2, whether you got it at the midband or slightly extended, both good trade entries, long, stop out with the tighter stops under stealth and line 6. You get another shot to get in here, which gave you a little scalpy trade. Okay, cool. Now, I'm going to advance the chart now that we're all on board. By the way, is there anybody in here that doesn't understand our methodology and how we get in? We're retracement traders and trends. And we trade the extremes of ranges, okay, at a very high level. If you were to just sum up our trading style using a couple of sentences, that would be the summary of it, okay? We trade retracements in a trend, which are pullbacks, right, to support or resistance as our primary mode of trade entry. Or when we're in a range, and we're going to look at some ranges, we trade the extremes. We tend to not trade the midband, especially if the midband's right in the middle of a 20-tick range. You generally aren't going to be taking that as not a meat on the bone to get, unless it's a huge range, and we'll look at that too. Now, I'm going to go ahead and advance the Russell chart. And when you see a trade setup, I'm going to do the whole morning here, okay? Because I got to get 6 instruments in tonight. So I'm going to rip through Russell pretty quickly here. I'm going to do a rapid fire, recreating real time of the Russell from this morning. And each time you see a trade, and I'll help you out, they're long, so they're all going to be long, right? Trend was up. You type in a T. I'm going to go all the way from here to the close of the room. So each time you see a trade, type in T. We know it's long. Here we go. I'm going to go pretty quickly. I'm going to be playing the market at about, I don't know, 50 times what it would normally be. So in the next couple of 5 minutes, I'm going to cover the next hour and a half. Okay? You ready? You ready for some rapid fire practice? Because you know what? Tomorrow morning it might look like this, and you got to know what to do. Okay, here we go. Here's an hour and a half on the Russell coming at you at double speed. When you see a trade set up, type in a T. Here we go. Okay, don't count this one. We already showed that one. Don't count these. This doesn't count. I'm starting right now. Ground zero. Here we go. Remember, when you see a trade set up, you type in a T. This is checking your visual ability to see the trade setup itself. Okay? We'll circle back when we're done and talk about what happened. Okay, market's coming at you. We're at 641. You've looked at about 8 minutes of market in about a minute. So it's going a little fast for what it would normally be. Take a look at what she's doing. Look at what she's doing. What's the Russell doing here? Okay, now you're at 6:46 a.m. Pacific. Still going. Oops, I think I lost it there for a second. Let me go back to where we were. Let me go back to there. Okay, this is where we were. 6:48. Okay. 6:50. We're coming up on 7. Rapidly moving forward through the morning. Okay, there's 7 a.m. coming up. 6:59. There's 7. Okay, we're in. We've been playing about 25 minutes of market in 2 minutes. It's coming at you fast. Okay, there are trades here. You should be typing T's in when you see them, right? Type in those T's when you see them. This is practice for when you go in tomorrow morning and the market's coming at you real time, right? You're going to have to see it. You see it on your chart. Don't wait for a call. You got to see it yourself. Okay, we're coming up on 720. Trend is still up on the Russell. $730 coming up. Heck of a move underway here. 734. Okay, we've covered about almost an hour of time in 3 minutes. Okay, 738, 739, 42, we're coming up on 8 o'clock. We're going to wrap our little session here. 48, 52, 7 a.m. coming up. And there's the end of it. All right, good. How'd you do? How'd you do? Do you remember where you called them? Okay, let's go back and recreate what happened here. I'm going to quickly go through this because technically I'm out of time on Russell. I should be moving on to another instrument. So we're going to very quickly review. I'm just going to point them all out. I'm not going to... Oh, Greg counted them. He got 16 of them. Well, he might be. I'm not going to box all of them. I'll just quickly show where you should have been typing in T's. There's the first one right there. There's number 1. Here's number 2. Here's number 3. Here's number 4. Did you get all these? You getting these? Okay, what do we say? There's number 4. Here's number 5. Right? Here's number 6. Almost all of you are getting these. You're just totally nailing them today. What do we say? It was 6? Arguably, you got 7 here. You got 8 here. They meet the criteria. They close below line 2, line 6, and stealth. So what is that, 8? Not here. This is no. No. This is not deep enough here. But here and here, yes. Arguably, these are deep retracements here. I think Gary was calling out. I might have been done with the Russell by now, but you had a couple more here. 1, 2, and 3. So what's that, 11? Something like that. These are not trend change. These are deep retracements in the uptrend. This is the swing indicator here, Nick. The one that puts the dots on the charts. Right here. That's your swing indicator. And that was the last one going into 8 o'clock, this one right here. So I don't know if there was 16, but it looks like at least like about a dozen or so, depending on how you counted that. Somewhere right around a dozen long trades, and every single one of them made money with literally no heat. Almost no heat on any one of them. Perfect morning on Russell. I think I was done by about here. When I finally stopped out of this trade, which I think was either here or here, I can't remember, because I was having some real super loose stops. I had positions, and you can get away with this. I can't remember the exact number, but I believe I got long. My first contracts that I loaded up on were in here somewhere, so I did get long, and I held some of them all the way up, which was a 100-tick move. But I was getting in and out of here as well. I was adding contracts, getting out, adding contracts, getting out. So when you get a little bit more experience and you start to get a very high win rate and a very good confidence level, and you get to know your instrument really well, that's really the way to do it. You got to start with an initial very, very good fill shortly after the open, close to the open if you can, like right here or right in here. And there are some days, not every day, but there are some days when you could actually wind up holding those positions for not the whole morning, but for a substantial period of time, like an hour or more. But you got to have extremely loose stops. You got to kind of just let it do what it's going to do. You know what I mean? Until it comes back and bites you. A lot of people can't do that. By the time you're up here, you're up, 50 ticks, and you want to be banking some coin. So, it's just another approach. So just to be clear what I'm talking about, so you might be saying, what the heck is he talking about? What I'm saying is that you start off with an initial position of 1 or 2 or 3 lot at a very early stage in the trading, and you leave them on until the whole move is done. Now, do you just sit on those 2 or 3? You don't have to, because you can add in here and sell. You can add a couple more here, scrap. Add a couple more. You get the idea. So while your longer term position remains intact, you're scalping and taking advantage of the smaller moves as the overall move continues up. By the pullback, we're not looking at the dots, Nick, if you're new. The dots are not necessarily a trigger of indication. We tend to, some people are brand new here, so let's do this. Let's do this. Let's look at some good examples here. I want to show this. Let me see if I can do it all on one chart. I'm just going to show this once because it's universal across all charts. I'm not going to do this on every chart. Think of the retracements in the market. Stand by 1 second, please. Okay. Let's circle back. The retracement area on a trend move you can think of like a strike zone. The minimum retracement can be shown here, where it is piercing and closing below stealth, the green snaky line, and line 6. This is the minimum retracement level to get into a long trade on a pullback. In the strike zone analogy, that would be up near your shoulders, right? Now, right here at the midband, this is around your waist. We love midband trades. This is our go-to bread and butter trade right here, right around the midband. Deeper retracements, they come down into this area down here, or would be down by your knees in the strike zone analogy. Here's a good example of one right here. See how it's gone deeper than the minimum shallow retracement? It's gone past your mid belt, and it's right down at your knees. Now, you could go back here and say, well, you know, in this area here, Charles, you were going sideways. And that is true. Markets go through periods where they go down, markets go through periods where they go up, and markets go periods where they go sideways. Now, in a sideways market like this, what is your primary mode of entry? That's what you have to determine for yourself. When I say primary mode of entry is, to enter trades, are you shorting resistance? Are you buying support? Or are you trading both sides of this range? What's your primary mode of entry in a situation, in a range situation like this? Are you shorting the top, covering at the bottom, buying at the bottom at support, taking profits at the top, or are you trading both sides of this market? What do you think? Trend is sideways to up. Sideways to up. What do we do in sideways to up? You're buying support. So the answer is buy support. You're not shorting. This is a no-no. And you're not trading both. You would not be doing this. Why would you not be doing that? Why wouldn't that be a good idea? Well, if you're short in the top and then it breaks out over here like it does, you're going to get creamed when the trend continues. These are counter trend trades and we don't do those. Okay, until the trend changes to the downside, then we're taking shorts. Now, does that explain? So when you're looking at a chart, we have to be thinking of these little zones, right? Minimum shallow, mid-band, and down by our knees, deeper. Each one of these depth of retracements are acceptable for trade entry. So what you're looking for is and it can be as much as a candle or two that sit at a mid-band, perhaps, or just above a mid-band. It can be just as little as a couple of 3 candles, or it can be a whole bunch of candles where it sits there for maybe 2, 3, 4 minutes. Okay, like over here, for instance, let's look at a couple cases of this here. Over here, for instance, it came down into support around 656 or so, and it didn't pop out until 658. So it actually sit here almost 2 minutes. Plenty of time to put a region box and get a trade on here, right? 2 minutes is forever in trading time, right? Now, some of them are quicker. Like this is right here, came in the support at 633, and it broke out at 633.30. So you had about 30 seconds. 30 seconds. Over here, 637 and change, and it popped out arguably at 638 and change. So about a minute. So you get the idea. You get between maybe 30 seconds on the quick side, quick draw McGraw, and up to 2+ minutes for markets to come into support. We generally like to box areas in using our object tool using the region box. However, if you're not comfortable and you don't know that tool yet, you can also put limit orders in where the box would be. Just right-click, pop in, put a limit order, you're filled. The only difference, though, is that you have to manage your own targets and your own stops, whereas Object Trader will do that for you. All right, I need to wrap up this chart. Any final questions on this chart? Yeah, I see you got a lot of comments there, Nick. It's okay. You're learning. We're about a half an hour in here. Trust me, you're not going to pick all this up in the next 30 minutes. It takes a little bit of time. You got to get some chart time under your belt, and you got to watch some videos and get Ninja Trader, put some charts up, and trade in real time yourself. I got to get over to NASDAQ. Let me pause the screen. Yeah, I've got to move on from this chart, guys. I've blown a half an hour, and I can't do that. I've got 5 more instruments to cover, and I'll take more questions on other instruments if you have more questions. Okay, so let's move on. I promised NASDAQ that's coming next. Let's get back to the open on Spazzy Wazzy. Okay, so here's the deal. If you had a scale of volatility from, let me get back to the open. You see how many bars you're dealing with here? I'm just back to 7:30. I'm not even close to 6 o'clock yet. Trust me, I don't have time to cover all this. Okay, I'll cover what I can on this. I'll get you through most of the day, and then I'm gonna explain it to you in a minute here. Let me just show you. Okay, when you talk about volatility on NASDAQ, let me see if I could illustrate it to you this way. At the open on Spazzy Nazzy, here's 6:30 Pacific on the left vertical line. All of these bars painted in 2 minutes. That's the first 2 minutes of NASDAQ. That's a lot of bars. The first minute was from here to here, and the second minute was from here to here. That's pretty fast. So do you think you would have had a chance to catch any of these trades in the first 2 minutes? Let's take a look. In this retracement here, it came down and hit the mid-band at 6:30.04, 07, and it bounced at 6:30 and 14 seconds. So it was down here for 7 seconds, right here. Okay, let's look at this one. This one bounced down under the mid-band at about 6:30 and 54 seconds, and it bounced at 58 seconds. So these bars formed in about 4 or 5 seconds. Okay, remember what we looked at on the Russell? What was those numbers on the Russell? Anybody remember? What was the numbers on the Russell boxes? We just looked at them like a minute and a half ago. What was the numbers on there when we looked at the retracements into support? How long did it sit there? What was the average? Anybody remember? We just looked at it. Wasn't it 30 seconds to 2 minutes? Here, let's do another one. Here's a retracement under the mid-band. You might have tried to buy the bounce for NASI. This one came down at 6:32 and 13 seconds, and it departed up at 6:32 and 17 seconds. So you had roughly 4 seconds to get this one. So my question to you is this. Is this first 2 minutes on NASDAQ tradable, yes or no? Unless you're a computer. As a human trader, you know, a regular person, is that tradable? Is it feasible for you to put a region box in place, set it all up, turn it on, take the trade in 4 seconds or 7 seconds? Is that possible? Would you have caught any of these trades, realistically? No. In fact, I would go so far as to say, don't even try. What you're looking at right here is the reason that NASDAQ is no longer in the live trading room. We used to have NASDAQ for a long time in the live trading room, and we got rid of it for this reason, because you have to babysit it so much. Here's what it comes down to. NASDAQ is so fast, their algorithms are pumping so quickly that you either have to have an automated program to do it, or you have to simply wait for the market to slow down a little bit so that you can actually get in. And the fills are terrible. The slippage is terrible. That's right, Chuck. For most of you, if you consider yourself to be sort of a intermediate trader, sort of beginner, intermediate level, not at the super expert, you really want to avoid NASDAQ. Let me do it this way. Let me see if I can explain it this way. On a scale of volatility, with this being up at here, let me explain it this way. Here's the best way to get an idea of what I'm talking about. If you're going to put volatility up near a high level at the high of 10, okay, this is the highest level of volatility, and then down near 1 would be the lowest level of volatility. And if you were to rank each of the equities instruments, I would put NASDAQ up here right near 10. We have traders that trade NASDAQ. So look, don't misunderstand what I'm saying. I'm not saying don't trade it. I'm saying if you want to trade it, try and sim. And if you get your keister handed to you, you know it's something you really want to avoid, because it's going to drain your trading account. If you're trying to qualify in a combine, you're never going to get through it with NASDAQ. I can tell you that. The losses are going to be too high. Now, ES would be at the complete opposite end of the spectrum. It is the slowest. Heavily institutionally traded, 1 million to 1.5 million contracts a day. You know, a big move on ES is like, 12, 15, 20 ticks. That's a huge move on ES. Whereas 100, 200 tick move on NASDAQ is nothing. It can chomp through that. When it's 600 ticks this afternoon. Yeah, NASDAQ might be an 11. Okay, and then in the middle here, if you're thinking about volatility and how much you like to trade it, I would put YM up more towards the NASDAQ end of things, because you can get a little whippy sometimes. Kind of maybe a 7 or 8 volatility, depending on what day you're talking about. And right in the middle here, right in the sweet spot, is our old Roosty. Why is the Russell so smooth and these other ones are flipping around like a fish out of water? Why is that? Why is that? Any idea? Why is the Russell so smooth and everything else is whipping around all over the place? What's going on with Roosty here? Any ideas? That's right. I've said it before. You remember, Dave? That's right, Greg. Yeah, it's got low volume. It's relatively new to the CME market. You remember it used to be TF. TF was the E-mini and it was $10 a tick, and it was traded on ICE, and you had to pay over $100 for the data feed. Remember? Remember they got rid of it? They dumped that, and they brought it over to CME Group, made it $5 a tick, right? So the volume is still pretty low on it. The big boys aren't running algos on this yet. It's not too heavily institutionally traded, so it tends to be a little smoother because you have more retail traders like us trading it, right? EMD is good too. We used to trade EMD. In fact, EMD midcap 400 futures. But here's the only thing: sometimes you get bad slippage. Sometimes the spread on that is 2-3 ticks. Okay, so 2-3 ticks a slip plus commission. It's costing you a lot to get in and out. Some days it's a lot like the Russell. You have to just look at it and trade it in sim if you want to try it. I put EMD kind of in the middle here, somewhere right in here. Excuse me. If you're looking to find a good instrument to trade, most days that isn't going to whip you around, give you a decent amount of movement, not as much as NASDAQ, but more than ES, this is the sweet spot for you right there. I would learn this instrument like the back of your hand. If you learn this thing and you learn our techniques, how to get in and out of it, you'll make money pretty much every morning. Yep. It's not going to whack you around too much. If you do get into a drawdown situation, it's not going to be that bad. You can leverage up on it. The slippage isn't too bad. You really want to be right here. But anyway, so we said we'd go through NASDAQ. So let's continue on. E-mini S&P futures are the ES, Dave. That's the ES. E-mini S&P futures are the ES. That's down towards the lowest end of volatility down here. Russell in here, nice and smooth. YM can be really choppy, higher up here, but it's not near as bad as SPASI. SPASI's way up here at the top. Okay? That's our spectrum of volatility on the futures markets. Okay, good. So 633, you can see here is a long trade setup sitting at the mid-belt right here on the mid-band. Nice run up, little pullback here, getting another shot to get in, another shot to get in there. So this was a nice pop long on the SPASI child. It went sideways a little bit. Arguably, you had a couple of spots to get in here. Long again. Trend was up. Couple little pops. Those happen pretty quickly. See, this is what I'm talking about. Here's a good example right here. So if you had a mid-band box and you got filled long, it flipped right in your face. Maybe you got a scalp, maybe you didn't. It flipped right in your face, stopped out, went deeper. You'd have to come down here to get back in it. And then it had another trade. So you got to be like a rabid dog on meat to try to trade this thing. You got to be fearless. 12.50 a tick is the value of it's $50 a point, and there's 4 ticks a point, so it's 12.50 a tick on ES. We'll look at an ES chart in a minute. So just hang tight on ES, you ES traders, okay? Moving on. Here's where it really gets you. This is just classic NASDAQ. It's trying to hold this level of support here. So here's another long trade here on a retrace. Here's another long trade here on a retrace. And then unlike the other instruments, which respected mid-band, you get this bit way down here like this. Turns the background red. You're thinking maybe short, right? Blows right through all the bands to a fresh swing, taking all these swings out. This one, this one, this one, this one, all the way down here. And then the darn thing flips right in your face, and babambo, all the way right back up. If you can stomach this, here's what we always used to say. If you can get through the chop without getting too beat up to catch the runs, then you want to look at NASDAQ. If you can't get through that chop and you're too beat up so that the runs bring you back to break even, then SPASI's not for you. Yeah. I don't know if I would even call this a phantom trade. A phantom trade is supposed to pause right here. Right? And a phantom trade is supposed to pause here, right here at the outermost, but went deeper than that, all the way down to here. That's happening in real time. I mean, when that happened in real time, you might be saying to yourself, dang, changed the background, took all the support. Maybe I'm going to come kiss a mid-band. I'm going to look for a roll short. Roll short. No, oh, jeez. Oh, what the heck? Turn this off. No mas. No more, please. I can't take any more. Give me something I can trade. All right, enough. Enough silliness. Let's get something else up. Let's get the complete opposite, our friend Mr. ES. Let's get a little friendly instrument up here. I don't want any more pain. I want my warm blankie. Get the bad thing out of my room. It's hiding under the bed. I'll tell you, still occasionally I'll try. If I see, you know what, if Spazzy slows down a little bit and she starts to behave herself, sometimes later in the morning she'll kind of slow down a little bit, and you can really see good trades. And like this afternoon, it ran 600 ticks. I mean, you know, you can just fall off a log and hit the buy button and make money on a 600 tick run, right? Literally 600 ticks. All right, here's ES. Now this is a very unusual day. I got to tell you, ES does not normally run like this. It just doesn't. It really doesn't. I'm telling you. Now, here's what I'm going to do. Okay. I'm going to show this in two ways. Today, you could have traded a 4 because there was such huge volatility, very similar to the Russell. Let's recreate, and then I'll show you a 2. Most days you want to trade a 2 because it's just so slow. You're hardly going to see any trades at all if you trade a 4. Here's 630 on ES. Here's the overnight session, so you can see it looks a lot like the Russell. Asian session was selling off E-mini S&P. I think this is when some of the tweets were coming in back and forth with China on the tariffs. They didn't like that. Markets didn't like that. Now, when I put a 2 on, let me show you a couple things here, okay? These retracements are going to become much more pronounced and easier to see. For instance, here and here. These were legitimate short entries, yes? They meet the criteria for our minimum retracement. In a downtrend, we must close above the red stealth and line 2, the thin line, the thin red line. We must close above both. Here's a short here. Here's a short here. Here's a short here. That didn't work out. Didn't work out. Right back up here, we consolidate, trying to figure out which way to go, right around open of the market. Now you got a little ABC pattern here. Arguably, if you had a box around the midband, you were filled long here. This is where I got in. And then I added to it when it did an ABC pattern. Here's classic ABC. A, B coming back, checking the top of the box where you got in. B, and C, she takes off. Classic ABC. So you get this a lot of times. A lot of times you don't. Okay? What we're saying, just to be clear, is that if you miss the initial entry here, you get another chance to get in with a pullback right there, and that happens sometimes. All right? You can see another pullback here on ES, coming in and holding support. You might remember some of these numbers. Remember I was saying 06. Remember it went all the way to 12. I was surprised. I thought I'd called for it to hit its head at 10. It poked right through it all the way to 12 right here. See it? Pulled back. Remember the numbers? Remember 06? Closed 0550. Anybody in the room remember that? Remember? Here, let's go back and recreate that. I said it's going to pull back. It's got to hold at 0550, 06. Remember? And I said if you want your tight stops, get it at 08 or 09. This is what I was looking at when I say tight stops. I'm saying right here. This is your tight stops. Comes down through, closes through stealth and line 6 on a long trade to get out. That's called the tight stops. For your trails, loser stops are down here, normally by the midband. In this case, I was going down here. 4 3/4, bounces back up through the midband, pauses again, secondary entry right here. Maybe some of you weren't trading ES, but the ones that were trading it, you're going to remember those numbers because I call those out. I'm trading it with you. And then you had a beautiful run. This thing ran, and this never happens on ES. I mean, I haven't seen, probably 6 months or a year, I've seen this much movement. Overall, from top to bottom, I think it was like 100 to 120 ticks. So that's uncalled for on ES. Just uncalled for. Let me put a 2 up here, and then I got to get off of this instrument. Excuse me. You're going to see that the retracements are much more pronounced on a 2. I personally trade a 2 on it. Oh my goodness. Oh jeez. I just have to say this. I have some real estate here in California is just so unbelievably out of control. They are showing us literally a one-bedroom shack in the middle of Los Gatos, which is kind of a ritzy part of Northern California. It's like a one-bedroom hole in the wall that looks like it's about 900 square feet. Guess how much they want for it? Venture a wild guess? 800, 900 square foot one-bedroom shack in the middle of nowhere. Guess how much they want for it? 900,000. That's right, 900,000. $1,000 a square foot is what property's going for in California. Well, you got all the big tech. You got Facebook. I could throw a stone and hit Facebook for my house. Apple, Google. Apple just built a spaceship, right? Everybody saw that, right? Did you see the spaceship? Like 5 million square foot, one of the largest buildings in the world. Anybody see it? Tell you what, after we get through the trades, I'll show it. But see how much more pronounced it is here? See how the 2? See how very nicely it comes up? And then look at the 2. Look how nice it is where it tracks. See how it's tracking the stealth in line 6? So it comes down, comes back, pull back, holds it real nice, holds it real nice, holds it real nice, and then you get out right up here. Things are all a little tighter, and they're a little clearer when you trade a 2. If you like lower volatility, you can have, trade a 2 on ES. Be patient. Now, here's the thing. Look, if you're only getting, 8 or 10 or 20 tick moves, you're not going to make a killing with one contract, right? That's only going to be like $150. So how do you make money on ES? Okay, I got a text box here, and I'm going to put in one word. How do you make more money on ES if the movement is slow and reliable and not too whippy? What's the word I got to type in here? How do people make a lot of money on ES? What are they doing? It's one word. You want a hint? You want a hint? It starts with an L. Okay, I got to type something in here. I'll start the word for you. You fill in the rest. What's the rest of the word I got to put in here on ES? What's the word? What's the word we're thinking of? What's that game? What's that word game? Remember the word game? What's the word game? Leverage. Good. Leverage means, and somebody said this, is more contracts. Here, so leverage equals more contracts. Right, exactly. I'm not saying you're going to go do this tomorrow, but you could throw 100 lot. You could throw 200 or 500 lot at ES, and it would be, nom, 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 thank you very much, give me more. I mean, regular bid-ask amounts are 1,500 and 1,200, just the bid-ask. Yeah, leverage, more contracts. So, what you want to do is that once you get a little better, you'll put 2 on, and you can go up to 4, and then you can go to 5, 10, 20, 50. If your account size can handle it, you can throw as many contracts as you want at this puppy. So let's use an example. Let's say you missed this original box right here, and you got the ABC pullback, and you got filled on the close of that bar right there. So that is 99 and a quarter. Let's do some quick math, and we'll move on. So 99 and a quarter, and you trail it up, 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 and you eventually get taken out here at 0975. So that is 10 points, 10 and a half points, right? 10 and a half times 4 is 42 ticks. 42 ticks times 12.50 a tick is how much? 42 ticks at 12.50 a tick is how much? Do some quick math here. Get my slide rule out. For my 525. Yeah, roughly, between 5 and 550, depending on, your actual fills, where you got in, slippage, where your stop actually. Between 5 and 550, call it 5.25. Now we're talking about leverage here. So we said one lot on this one trade. You got in at 6:46, 15 minutes into the market open, and you held it till, I don't know, 7:40. You held it about an hour. We said one lot equals 5.25. So let's do some math together. How much would 4 lot be? How much is 4 lot? 2,100. 10 lot. We need to put 10 lot on it, which is nothing. That's nothing to ES. That's just give me more. I'm not going to do all this all the way up. You get the idea. So this is how I make money on ES. What I'm trying to show you here is that the people who trade ES heavily and make money in it leverage up, leverage up, leverage up. And the time to leverage up is when it's super choppy, huh? When I see a tight range-bound choppy day, I load the boat for bear. And when I see a big run and the market's running and everything's trending and all the equities are going up, I stand down. Maybe I'll dip my toe with one lot. Is that how you do it? Huh? Come on, I'm messing with you guys and gals tonight here. I'm messing with you. This is a load the boat day. Today was the day that you go for the broke big bucks. Everything is running. Everybody is a genius in an uptrend. Hit your head on the buy button and make money. I am not kidding you. Seriously, this is the day of leverage. Of any of the days that you leverage up, it's days like this. Okay? This is the days you leverage. When it's choppy, you stand down. So what am I saying here? Let me just conclude this, and I'll try to squeak one more instrument in. You don't leverage so much, and you keep things tight when markets are slow, choppy, and range-bound. Right? Now, quite the opposite when markets are moving, when there is huge volatility. There's big swings up and down, big swings up and down. All the equities are moving in sync together. They're all running up. They're all pulling back. Large movements. You leverage up. This is where most of your money is going to be made. High volatility. Now look, I'm just going to say it this way. I don't really know what your political persuasion is. It doesn't really matter. But I can tell you this, that President Trump being in that office and tweeting as much as he can, creating all controversy on, there's nothing safe from his tweets, right? Tariffs, refugees and people, immigrants. I mean, you name it. And so that creates, what does that create in the market? Uncertainty. What does uncertainty equal? High volatility. So whether you like him or not, it really doesn't matter. He is a trader's dream. I haven't seen volatility in markets like this for probably 10 years. I'm not kidding you. It's been a long time since we've seen volatility, like this. Really. It's been maybe 5 years. Certainly 10 years ago. Maybe towards the end of I started trading in the mid-90s, year 2000 with the high tech, and the boom and the crunch and all that. That's 15 years ago now, over 15 years. So we got to make hay. He's going to be in there in another 3 more years, and then maybe get reelected. This next 4 to 8 years, we got to make money. This is money-making time. You've got to learn the system, pick your spots, learn those instruments, and then leverage up on the big move days. Okay, listen, we're out of time. I want to squeak in one more. Let's take a vote. I can get in gold or YM or CL. pick your spot. I was able to get through the Russell, I got through NASDAQ, and I got through ES. So we got 3 of the 6. Type in what you want to see, and whatever the majority vote is, that's what I'll put up. So cast your vote. Gold, YM, and CL. And I'll pull one more out. CL, 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 CL. CL, a ton of CLs, only 1 gold, and a couple of Weimers. Okay, so crude you get. Now, there was a question earlier about gold and crude. While this chart is loading, I'm going to answer the question. I can't remember who asked it, but it was something in regards to, like, what was it? It was like compared. It was something like if you put gold and crude on the equity spectrum from ES to NASDAQ, where would it fall? I think it was something along those lines. I would put them somewhere in the middle. I'd put gold towards the slower end, not all the way down in ES, because it's, here's the thing about gold. And if you watched it in the room, you've seen this 1,000 times. Gold goes in kind of fits and spurts, right? Gold can sit at the mid-band for an hour and a half. Or 30 minutes, it can just sit there and like hardly move at all. And all of a sudden, beep, 40 ticks. And crude is the same way. Now, here's the other thing to consider about crude and gold. Okay, they're $10 a tick instruments. So from a risk return perspective, they're twice as much as the $5 equity instruments, right? Now, here's crude from today. This is uncharacteristic of what crude does, but some days it does it. This is the day after inventory. Inventory was yesterday. In fact, there's actually some numbers that come out on crude on Thursdays. I forget, it's like the Petroleum Institute or something like that. So, I mean, today was up. It just went up. It looks very similar to the equities. In fact, there was a high correlation of the equities to crude for a long time, and some days that's still the case. So just to orient you again real quick on this chart, like the equities, here is the midnight Pacific time, Asian session here, sell-off in crude, up till about the same time as the Russell, right? 523, 530-ish. Trend changes. I'm going to do 2 questions. I heard a thump. I heard a thumping noise. That means that a couple of you fell asleep and your head hit the desk. So now that you wake back up, we're going to do 2 questions. Between this line, I'm going to do 1 question here. Between these 2 lines, how many short trades set up on crude? 10 seconds on the clock, making sure you're still awake here. 10 seconds on the clock. How many short trades overnight in the tail end of the Asian session and the beginning of the European session set up on crude? Counting short trades. Now remember, we did this exercise on Russell, and most of you got it right. Counting short trades. From here to here. In between here. 6 seconds left on the clock. Count your shorts. Cast your vote. Four seconds. How many shorties? Remember how we trade it. What are we? We're thrust traders. You get in at the apex of a thrust, right? So you'd be counting the thrusts on the chart where it pushed down. That's where you get in, right where it gets at the low, right, when you're shorting. Been messing with you guys and gals tonight here. No, it's retracements. Time's almost up. 2 seconds. How many shorts overnight? Come on. Crude. 1 second. 1 second. Okay. All right. Let's look at the obvious ones. Time is up. Okay, so we are retracement traders, right? So here's a retracement here. We'll do the obvious ones first. There's we'll call that a shorty. Technically speaking, that was a short, yes. Okay, it met the criteria. It didn't work out. But here you got back in here, if you stopped out of it. Beautiful short all the way down. Did this qualify? I don't know. okay, I'll give you a little bit on this one, just barely. See, that's how it's wicking. And then wicking again. Now, I'm going through what technically qualifies as trades. Would you know, did they work out? Should you have taken them? We'll talk about that in a second. And, you know, some of you are going to try to make the case that this was a short, and if you didn't get in there, you know, you might have got in here. All right, so you know, when it broke here, you know, I think it would be hard to make the case that you would take it as short from here, simply because at the time this box formed, the market was heading up. See it? Background was green. You were looking for long trades, so you probably enabled long only. It never got filled. Okay, so then it dipped below the midband, and maybe you threw a box on it and enabled both sides, in which case you caught that first short. But even if you didn't, here's another little ABC, right? A, B, right back to where the box was. And so you didn't miss anything technically, right? And then she rolls over and you get short again, and you get another short, and you get another short. So, you know, you can make the case that you had 1, 2, 3, 4 entries. And then I don't know what you want to call this down here. I would not count this one because it really never got filled, and then up you went. So I don't know if you said anywhere like a 4 or 5 short entries, you were correct. Now, it went up most of the rest of the morning from 5:30. Now we're going to count long trades on oil into the close. Well, no, tell you what I'm going to do. I'm going to do it like this. I'm going to make it a little bit easier because it's just so much. It's so much data. I'm going to do it like this. Okay, here we go. Okay, here we're counting long trades from this line on the left all the way over to here. Counting, this is the last exercise, and we're going to wrap. We're counting long trades on crude. How many long trades were there that set up on crude oil between 5:30 a.m. Pacific in through the close? Well, no, actually, technically, that's about 10 a.m. In the morning. So that's about 5 hours, roughly. 4.5, 5 hours. Say you've been watching a crude chart, maybe live, maybe practicing, and you're just getting in and out, in and out. Where are you getting in and where are you getting out? Where are you getting in and where are you getting out? How many long trade opportunities set up on crude? We'll go with 6 seconds left on the clock. Count your longies. And then we're going to wrap. Long only here. Trend is up. We're retracement traders, so you're counting the pullbacks, right? Counting the pullbacks using the criteria defined by our trade setups. Let me blow this up and make these bars a little bit bigger. There you go. Is that better? That help a little bit? There you go, like that. Let's just go like that. That should help you see them. 3 seconds left. Counting long trades. Running out of time. 2 seconds. How many do you see? If you got this chart tomorrow and you start trading crude tomorrow morning, what would you do? 1 second. Get your number in. All right. Time's up. Now, you know, I'm going to do the obvious ones that pop down to the midband first, and then I'll do the shallow ones because there was a lot of shallow ones. You can obviously see you got a little double bump right here. Long. Midband kisses. Bounce, bounce. This one turned out beautifully. 644 till. In fact, I think we called that. Didn't we call that in a room? Anybody remember? I think we called this one in the room. In fact, I think I might have. I know I caught a couple of these. I think this is one of the ones I caught. I can't remember. There's a lot of trades this morning. Here's another obvious one here. I know we called that one. Shallow retracement there, shallow retracement there, and then all the way over to here. I'm going to count this as one, even though it was kind of a double bottom at support. Just a few ticks under the midband. There's another one right there. Okay. So the obvious ones that came close to the midband. Toby, you caught that one? Some of you kind of caught a couple of these. Yeah. So the obvious ones close to the midband were 1, 2, 3. Now, Shallow retracements, counting shallow retracements. And I'm not going to give it if it's just a wick or two of a candle. Now, legitimately, that would be one right there. This would be one right here. This would be one right here. All right, let me ask you a question. Let me ask you a question. Are you ready? I'm going to ask you some questions to make sure you're still there. I mean, you can physically be there, but I'm going to see if you're mentally there. Is this a legitimate long trade? Yes or no? 5 seconds. Is that legitimate long trade? Yes or no? 4 seconds. Type in a Y, but bingo. Type in a no. A Y or an N. How long does that take? You should know instantly. 2 seconds. Legit in the circle or no? 1 second. N or Y. That's it. A letter. Bing. Done. Time's up. No. No. No yeses. Does this meet the criteria for entry? No. Does it close below stealth? Not check. Does it close below line 6? Not check. Okay, Walter, people are bailing on me. Have a good one, Walter. Okay, let's stop the recorder.